professional traders are going to try to, get what they can out of it. But I think for the vast majority of people, I would just point to that it's by most metrics a kind of a deep value zone based on a lot of different metrics. I think it's attractive with a 3 to 5 year perspective. If you monitor the fundamentals of the network, if you think the network's healthy, if you think all the aspects are still working as intended, if you don't see that there's any sort of competitors that are anywhere near close to what Bitcoin offers, then I think it's a strong buy. And I would just caution that, I do think that there is potentially a period of turbulence, in the second half of this year once some of this debt ceiling stuff's resolved. I think we still are not out of the woods yet there.
Lyn Alden is an investment strategist and economist who focuses on macroeconomic trends and their impact on various asset classes. She is well known for her expertise in the field and her in-depth analysis of economic indicators. In a recent interview, Lyn Alden discussed the relationship between money supply growth, inflation, and the role of Bitcoin in the current economic climate. She talked about how she tracks money supply growth across different countries and the historical correlation between Bitcoin and money supply growth, especially when translated into dollars. Alden says that Bitcoin has historically proved to be a decent play on USD liquidity, usually rising in price alongside an expansion of the money supply. She says that recently a slight easing of liquidity has helped set the stage for Bitcoin's rallies over the past several weeks. The macro expert predicts more price appreciation for the king crypto, but says that liquidity trends still weigh down on Bitcoin over the longer term. She blamed the delay of the Bitcoin rally on the FTX and Alameda Research debacle, stating that it caused a massive drawback to Bitcoin, but she is glad it is picking up now. I think that much like other assets that rallied, I think Bitcoin would have had a rally back then if not for the whole FTX debacle. So that kind of delayed the rally, but with that somewhat resolved, and now moving forward, I think Bitcoin and other assets in the ecosystem are kind of having their rally, which is a liquidity rally. Liquidity indicators look okay for the next couple of months, but overall, long-term, they're still not in a very good place. Alden says a similar scenario to March 2020 may await Bitcoin at some point before the next bull market, whereby a sudden liquidity shock hammers Bitcoin's price down to retest macro lows before quickly bouncing up. Let's us now get into the video as Lyn Alden discusses the Bitcoin potential and how the liquidity inflow is affecting the asset class. Also, as you watch, please ensure to hit the like button, subscribe, and drop any comments in the comment section below. Enjoy the video.
Part of my work is I track money supply growth quite a bit in different countries. And one thing you generally see is that Bitcoin has been historically very correlated with money supply growth, especially when you take global M2, so global broad money supply, and you translate it all back into dollars. And so the two big components there are, one, are a lot of countries printing money, and two, how is the dollar performing relative to those other big currencies, right? The euro, the yuan, yen, all these kind of major currencies. And generally, when that's rising very quickly, especially in rate of change terms, that's usually historically coinciding with the last 3 Bitcoin bull runs. And when that starts kind of rolling over and consolidating, that's when Bitcoin has also historically kind of consolidated. And inflation historically comes somewhat after money supply growth. It's basically a side effect that happens on a lag. And so when people, the inflation that people saw taking shape in 2022 is in large part a result of actions that happened over 2020 and 2021. And so, for example, someone did buy Bitcoin well ahead of that. If they were anticipating inflation, if they, saw that, this kind of fiscal stimulus and money supply growth was happening, if they purchased Bitcoin, it did, protect them against the ravages of those inflation, just not perfectly timed with CPI that they see. So that's one thing I'll kind of point out, because now we're in the 2022 is the phase of the Fed fighting back on some of the things that happened in 2020, 2021. And then going back to the idea of liquidity, basically domestic liquidity indicators, there's been a popular ratio that I've seen floated around and I've incorporated into my own analysis. I used to do similar ways of adding it together, and I like this one a lot, so I incorporate it, which is basically you take the Fed balance sheet and then you also take the Treasury's general account, because they have basically a cash account at the Fed, and any money in there is essentially dead money, right? So when that's growing, it's actually sucking money out of the system, and when that's shrinking, they're putting money back into the system. And so when you kind of take those together and you add things like reverse repos, you can get a liquidity measure that is actually rather correlated with risk assets in the United States. And when you look at a global liquidity indicator, in recent years, the dollar index is probably about as good as you're going to get, or dollar denominated global money supply. And that's because so many countries in the world have dollar-denominated debts, right? The dollar is for the most part, the unit of account for the world. That's changing somewhat over time, but most commodities are priced globally in dollars. Most international trade is denominated in dollars, and there's $13 trillion in dollar-denominated debt outstanding in the world. A lot of developing countries, when they borrow from international sources, it's done with dollars, and it's not even lent by Americans. Usually, it's usually Europeans, Japanese, Chinese. These, even though they're denominated in dollars, the lenders are all around the world because it's the global reserve currency. And so when you have the dollar strengthening relative to a basket of other currencies, essentially their liabilities are hardening compared to their cash flows, and vice versa. When the dollar is weakening, essentially their debts are getting devalued relative to their other currency cash flows. And so especially when that changes in a very kind of short period of time, like when it strengthens or weakens very rapidly, that can cause a liquidity squeeze or a liquidity loosening. So those are kind of some of the things I look at either domestically or internationally when talking about liquidity, which is already kind of a jargony topic to begin with.
There's a lot of skepticism surrounding the Bitcoin rally, and so many people are being very cautious because they feel like it is going to be a bull trap and that there is a recession underway. Lyn Alden pointed out that the rally has been seen as a result of an increase in liquidity and that the fears are not totally without cause. She explained why, which we would now see in the video.
Earlier part of the discussion, we talked about liquidity, right? So liquidity conditions all throughout 2022 were worsening based on various ways of measuring it that I talked about before, until we got to around Q4. At that point, the Treasury General Account was drawing down, which was actually pushing liquidity back into the market and offsetting some of the Fed quantitative tightening. Basically, more of that monetary base was kind of out into the world rather than locked away. And so it's kind of this like temporary offset. And now with the debt ceiling, they're unable to issue new debt. And so what historically happens is some of the measures they take to avoid defaulting until that's sorted out is that they empty out their cash account. It's kind of like if you lost your income, but you had some savings and you still pay your bills for a few more months. That's kind of what the Treasury's doing right now, and that's actually ironically good for market liquidity in the moment that it's happening. And so starting in Q4, you had like a stabilization and then an improvement in liquidity conditions, at least temporarily. And I think you started to see like gold and other assets kind of start rallying in Q4. And I think you probably would have seen Bitcoin do something similarly if not for the industry-specific blow-up that happened, FTX, Alameda. So I think some of what we saw in January is kind of like a delayed, function to kind of play catch-up a little bit. Now that we're seeing a little bit more just, boringness in the industry, it's able to catch some of that liquidity and start recovering. I do have some concerns around the second half of the year because once they resolve the debt ceiling, you're going to see the Treasury almost certainly try to suck back liquidity out of the market to fill back up its Treasury account. And if the Fed is still withdrawing liquidity at that time, you could have a rapid decrease in liquidity. So you could get negative retests, you could get consolidations, corrections. But it's unclear how this is going to play out. And it's possible that the Fed will not even be able to still be quantitative tightening at that time. It's possible that the Treasury will try to draw up very slowly. We don't know exactly when or how the debt ceiling is going to be resolved. So a lot of this is guessing game, and it's hard to say if Bitcoin, rallies and then corrects from whatever level it rallied to. It might not correct back down to where it is now, or it could, right? So I think basically traders, the professional traders are going to try to, get what they can out of it. But I think for the vast majority of people, I would just point to that it's by most metrics a kind of a deep value zone based on a lot of different metrics. I think it's attractive with a 3 to 5 year perspective. If you monitor the fundamentals of the network, if you think the network's healthy, if you think all the aspects are still working as intended, if you don't see that there's any sort of competitors that are anywhere near close to what Bitcoin offers, then I think it's a strong buy. And I would just caution that I do think that there is potentially a period of turbulence, in the second half of this year. Once some of this debt ceiling stuff's resolved, I think we still are not out of the woods yet there.
In conclusion, Lyn Alden suggests that despite the recent industry-specific blow-up in the crypto market, Bitcoin remains an attractive investment opportunity with a 3 to 5 year perspective. However, she cautions that there may be a period of turbulence in the second half of the year due to the resolution of the debt ceiling and the potential decrease in liquidity. She advises traders to monitor the fundamentals of the network and to be cautious while investing. Overall, Lyn Alden believes that if the network remains healthy and there are no close competitors to Bitcoin, which is unrealistic that they would be, then this is a strong buy opportunity. What do you think of the latest market rally? Or is this another bull trap? Let us know your opinions and concerns in the comment section below. Make sure to leave us a like, also subscribe, and turn on notifications for future videos. Thanks for watching.